All right, HPT Army, let's break into this mentorship webinar, okay? So I like to start the webinars off by reminding us that the purpose of these webinars, okay, is to become a more confident, controlled, and convicted day trader, okay? We got to know what we're looking for. We got to know what we're looking for, and when we see it, we got to be pulling the trigger, okay? But we also, and I think this week really helped us realize it, we really also need to know when not to trade. Okay, trading is a very psychological game, and most of the time we're either blowing accounts because we're just not focused on the proper information. Okay, I want to break down this week in a manner where we're really highlighting what it is we need to see before pulling the trigger. Okay, I need us high and tight. I need us to know exactly what works for us, what doesn't work for us, etc. So we're gonna break right into it. First day, Monday. Beautiful day, great opportunity. I was extremely proud of the way I traded Monday, and it was because the execution was flawless. All right, so Monday is this day right here. All right, so pre-market plan was pretty simple. Before I go any further, what I'm going to do is highlight my pit numbers, okay? These are the previous day high, low, open, and closes. And for Monday especially, I'm going to highlight previous day high, okay? Our previous day high. So what I do is I label it and I go PDH, all right? Previous day high is a critical level. You got to watch it. The reason why I'm highlighting it, and I'm just going to pull it from back here, is because this was a critical level. This was a very significant level going into the week. Look what happened, okay? We literally, you'll see here, this is previous day high, all right? So this level was key in the pre-market plan. Notice here what happened, okay? We got picture perfect criteria right here off this level, and that was our short play. So I want to show you how I got here, all right? So first things first is we're going to approach this as if it's a pre-market plan. Every single day we have two jobs, okay? Well, one job. And it's to figure out if this thing's going up or if this thing is going down. All right. Every day I approach the market the exact same way. It's identify the previous day pit numbers and then trade based off what happens at the open. All right. So I'm going to label this one critical because it's very critical. It's very important. Why? Why is this level important? That's a phenomenal question. And at any moment, guys, just stop me. If you got any questions, comments, concerns, or anything you would like to talk about. So 64738, okay, why was it important? Well, let's start from the beginning. Every day I look at the 1 hour time frame and I ask myself, what sort of trend are we in? Okay, this is what we call an uptrend. It's an uptrend because we're getting higher highs and we're getting lower highs, okay? This is exactly what you want to see, and now you want to look for a bounce off a critical level. Okay, why is this level critical? Very simple. It's because it's market structure. Okay, this right here is what we call a break and retest. Okay, this is a bullish chart pattern. All right, this is a very simple way for us to understand what sort of condition the stock market is in. Okay, this is how the market speaks to us via market structure. Okay, now why didn't you go long? That's a phenomenal question. When I see a chart pattern like this, or any chart pattern for that matter, I don't automatically assume that buyers are going to take this and she's going to rally up. Okay, that's not my job. My job isn't to assume. My job is to figure out who's controlling the market and execute, okay? So, once again, we do have a chart pattern, and theoretically, it's usually a bullish chart pattern, meaning buyers usually defend previous resistance, okay? Now, I'm going to ask you something. What happens if buyers don't defend it? Okay, so if buyers do defend it, we could pretty confidently expect a move up here to end of day, our previous day high. Okay, that'd be our bullish target. But what if buyers don't defend it? Well, if buyers don't defend it, we then target the downside pit number right here at previous day low and then previous day low. Okay, so every single day I approach the market the exact same way every single day, every single time. Okay, I identify key levels on the 1 hour time frame. I chart out previous day high, low, open, and close, the pit numbers. These levels have significant amounts of volume. Therefore, these are levels that I definitely should be watching. All right, so that's how we approach the pre-market plan. Now comes the fun part. All right, I'm going to whip out that 5-minute time frame. Now, well, hold on. Right before we go any further, let me just map out my upside target. Okay, my upside target is going to be end of day, which is previous day close, and then previous day high. Very simple. So now, chart on the right, I'm just make it bigger. This is what I'm looking. This is how I'm approaching the day. Once again, this thing is either sellers are going to take it and we're going to target this guy, or buyers are going to take it and we are going to target this guy and then this guy. Okay? It's very important. We don't have the time, the energy, the capital to be wasting trying to find perfect targets and perfect entries. And know what's crazy? I've collected the data. More often than not, we're going to get moves to these levels, okay? The pit numbers, because that's where the volume is, okay? So there's no reason to be thinking about anything else other than who's going to control the open. So right off the rip, first 15 minutes into the market, we get a beautiful moving average cross, okay? This right here tells us sellers are more dominant than buyers, and I want to trade with them. But I can't just get into the market, okay? If it's my job to figure out if this thing's going up and down, and I've figured out it's going down, now it's my job to identify an entry. So what do we get right here? We get a green candle that gets disrespected, okay? So this candle that's green right here, I'll just make it a little bigger, pops up into the market, and it's probably these buyers right here just showing up, trying to defend their positions. And then right here, this candle breaks the low of it. So at that moment, I'm entering into the market short right here, and my stop loss is going to go right here, okay? And then where am I going to target? Previous day low. We literally got a straight shot to previous day low, locked in a beautiful trade. It was literally flawless. So once again, the key takeaway from these webinars is to make sure our approach is repeatable, consistent, and executable, and easy to understand. And that was a picture perfect trade as a representation. It was absolutely beautiful. It was the only trade I took the whole day. One and done. Finito. All right? Very key. And once again, not rocket sciences, just following the strategy that works. Okay? So, market sells off like crazy over pre-market. Then we get ourselves another opportunity right here. Okay? So, once again, we have a very simple strategy. It's identify the open, which is right here. Open print. 930 bell price. Okay? Identify the moving average cross. And then the red bar got ignored, so we hop in the market long right here, targeting the upside target, and we get stopped out. All right? Now, lost about 23% on this trade. Okay? Perfectly accounted for. All right, don't care. But I could still take beneficial information from this. Okay? Just because my trade didn't continue the way that I wanted it to doesn't mean I don't know what I'm looking at, okay? I still understand the context, okay? The context being buyers literally just lost, all right? They tried and they couldn't withstand the selling pressure, probably coming from right here, okay? Which is completely fine. Once again, that's all right. So what do? We stay patient and allow price to give us another opportunity where we take the market short, and now we're targeting our downside target, okay? So once again, using those RBIs, those GBIs to actually enter into the market is a vital part of this process. Extremely important, Okay? Now, like, you can analyze these and be like, Josh, what's the difference, right? Like, this trade didn't work, but this trade did. And you know what? There's really, there's no point in analyzing it. I mean, obviously, Monday morning's trade was just beautiful. I mean, look at this. Beautiful entry. Perfect. Same criteria, right? What's the criteria? Identify the open, moving average cross, followed by the green bar that got shattered, disrespected, in short. All right? Now, you always want to look at this like it's blackjack. Okay? But you're not the gambler. You're the house. All right? Do you think the house bets on the fact that they win every hand? No, that's not feasible. Certainty is not the game that we play. We play probability. We play more often than not, this happens. Right? Key words there is more often than not. Okay? Not perfect, not 100%, not always going to work, okay? It's more often than not. So we don't trade, we manage capital, all right? So when we get a trade like this on Monday, we got to make sure we're actually executing it and we're taking advantage of it, okay? I mean, look, the rest of the day, there was nothing. Price action was trash for the rest of the day, okay? Much like Friday. Now, come Tuesday, when we get our edge to pop up, we take it, right? Beautiful trade, red bar ignored, in the market long, nice moving average cross, and then she reverses on us. But the market still offered great opportunity to the downside, considering the fact that buyers couldn't hold the open. You see how this whole strategy is based off who is controlling the open. Because, like I said, more often than not, price is going to return to a pit number, right? So, since we know that, it's now up to us to take advantage of that, okay? So, that was Monday. That was Tuesday. Couple of other cool things I want to talk about as well that happened on Tuesday. Nothing crazy, but just the fact that the edge did present itself multiple times later in the day. And just really understanding that open print is the center of all of it can really help you get a much better understanding, right? Like if you miss that trade and you miss the second trade, and then you realize, okay, maybe I'm getting a little extended from the 1 hour trend here. What's a snapback going to look like? Okay, and then price snaps back. Like right here, like once this happens, right, and you get that little RBI followed by the moving average cross. Like once we see something like that happen at the 1 hour trend too, that's usually a pretty strong sign that this thing's going to come back up to the open and possibly even high of day. And that's literally what happened. But that was Monday. That was Tuesday. Let's go on to Wednesday. Wednesday, I made a little mistake. And I think it's important to talk about. I don't even know if it's a mistake. Let's talk about it. So first things first, I got my pit numbers mapped. Okay. Where are they? Hold on. Let me pull them up. All right. Pit numbers. Perfect. Get rid of that. No RSI here. All right. So once again, we approach the market the same way every single day. So I have end of day down here. I have previous day high right next to it. This becomes our sweet spot, okay? We're opening up well above it, all right? We got a bullish target right here, okay? I'm just going to name this target for the sake of time. We'll make it like green or something, okay? So now, once again, I approach the market as who's controlling the open. I want to trade with them, and I am either going to target the downside or I'm going to target the upside, okay? This is the philosophy. Buyers, sellers, battling it out. Is my edge present right here? No. I don't want to do anything right here. There's absolutely no opportunity for me. So, but, I mean, I'm not writing off sellers, right? I'm going, if I get an RBI, I'll enter into the market, or a GBI. I'll go short. We don't get one. We actually end up getting this mess right here. All of this, and then we do get ourselves an RBI. Now This was a relatively large candle. The range on this was 90 cents. I didn't necessarily want to just enter into the market long, but I'm still going to identify the area of value. Okay, the area of value is the box, the rectangle around the GBI or the RBI. Okay, so the RBI, once it's present, we draw a box around it. This level, this zone becomes very important to us. So now price comes back into this, retests this area, right, of value, which is very important, right? Look at this retest here. We got a nice, strong, healthy trend. Bam, I'm in the market long. Now, I'm trading SPY here, and I haven't traded SPY in a long time. But I'm trading SPY, and I'm in this trade, and by the time we get up to like right here, I'm up around 37% ROI. And next thing you know, what's up, baby? Okay, just turn it down. Oh, okay. Love you, baby. So right here, I'm like, okay, I'm up around 37%. And know what's crazy is when I take this trade trading SPX, I'm like, a trade like this on SPX is going to pay well over 60, 70% ROI. So I allowed that to throw me off, and I didn't take any profit. Now, hindsight's always 20/20. Look at this trend. This thing looked beautiful, right? It's hugging the candles. This is a beautiful trend, right? Honestly, I'd probably hold it again tomorrow. But what I would do is make sure to secure some profit before making that decision. See, if you're trying to build a small account, or maybe you don't have that much capital yet, maybe you're just trying to pass your first funded or something like that, lock it in, all right? Because there's two different types of chess games, right? There's, the first game, you could afford some loss. You could afford, some pullbacks and some drawdowns. In the other game, you necessarily can't. I mean, you might not be there just yet. Make sure you're locking in your profit, right? Like, you guys know me. I like to hold trades pretty long. I really don't have an issue with holding unless, external variables are causing me to be a little bitch. Excuse my language. But, yeah, it looked really good. The trend looked healthy. Were we getting a little far away from the 1 hour? Yeah, you could say that. But price ended up reversing on me, stopped me out of the trade, and I was actually done for the day because I didn't like the way it left me, right? Like, I was really kind of frustrated. I'm like, wow, trying to build a small account, and it's just a really good reminder of how to take profit, when to take profit. And a key thing I definitely should have done was respect the 2-minute cloud when it came to the profit taking. Okay, this is something that this is once again a reason why we love moving averages, right? Like, when the moving averages are being respected, use them. Okay, like you'll see here on this trade, we never tagged the 20 once. So it might not be a good idea to use the 20 if we didn't tag it once, okay? Always use the moving averages that are being respected to make your decision, okay? This thing sold right through the 20 and ended up sinking, right? So all in all, ended up taking a loss on this trade, and I was up 38% on it. That's something I do not want to repeat. I think one time me and Todd were talking about it, and the conclusion we came to is if you're ever positive on a position, like, at least 20, maybe 15, 20, 25, 30%, never let that position turn to a red position. Never. It's just not worth it, and chances are you were in the good part of the move and that part's gone. Okay, the chances of you being up 35%, going down 15%, back up 30%, those are pretty small chances. So just don't do it. It's not worth it. And I learned that on that day right there. One more thing I want to point out, though, is look at how that area of value, right, that RBI that we were just talking about, this box, look at how it was respected, right? Like, and also notice the price action in it, right? These are very key levels to make sure you're trading out of. You'll see once sellers took that zone, they didn't let go of it for the rest of the day, okay? So couple good trades right there off open print. And
Hey, Josh, it was also the orb kind of little break and retest with that RBI too, and I noticed that a few times this week that
oh,
it played out pretty good.
oh, the orb.
Yeah,
Oh yeah, oh yeah. Look at this. She was a clean one. She was very clean. Look at this one. The downside would have been a little tough, because I was actually thinking the same thing on this one. Because anytime, especially anytime I'm getting some candles that are like next to each other, orb is usually a pretty good play, right? Like we got that consolidation, got a nice retest up into the orb zone, sell off, nothing crazy. But look at that right there, bam. Now, are you talking about to the upside and the downside, right?
yeah. Where you took your entry, that's where I was at. And I was loving that.
Let me ask you something, Todd, because I don't trade futures. Um, when you took this trading futures,
Hmm.
how are you trading micros? Are you trading? Uh,
No, I'm trading minis. I usually trade two or three minis.
and how much
Therefore,
is that now?
yeah,
Is minis? That's MES, right?
yeah. So it's
Okay,
$50 a point.
$50 a point. Okay, per
Yeah,
contract.
per contract. Yes,
Okay,
sir.
all right, cool, cool. So that was a phenomenal trade then, right?
Yeah, if you see, a lot of what I do, like on the 2 minute, and if it's not coming to the 20, I'll ride that nine, and when it
I
breaks
was just
below
gonna
that
say that.
nine, I'll cut it.
I was just gonna say that, Todd, because like,
Mm.
look at it, and like, and I stole that straight from you, bro, and I love you for it. Like, play the moving average that's being respected, right? So you're saying on something like this, you're hopping in right there, maybe on that
Mhm.
RBI or maybe this one, break and retest off orb, and then you're riding this until this guy, right?
Right, and if I'm trading like three or something, like I'll take two off right there,
Yeah,
and then I'll
leave one
kind
more.
of ride the bottom. Yeah, I'll leave one on and ride the bottom of the candles, and then once it knocks me out of that on that when that red is checks out one of those greens right there, I'm
Yeah,
out all out of it.
that's how I've been doing it too, and that's how I should have done it right here. But I want to talk to you about that because I'm starting futures this week, and I'm gonna finally give futures a shot. I'm actually really excited. Uh,
Hell yeah.
and yeah, I might not come back to option. I don't know. We'll see. But look at how one of my key tools is exactly what you just said. Ride it, ride it, ride it, and then when it breaks the low, get the hell out of it. You know what I'm saying? Like at least most your position. You know,
Yeah.
especially because we got no bounces off the 20 here. It's ignorant to assume, oh, I'm gonna play off the 20 when you ain't got no playage at the 20.
Right. Right. And what something you said to me a long time ago really stuck to me. You said no trade is special. So if I'm this game, this is a hard game. So if you up on the trade, man, you got to take your money and run. You know,
Yeah,
it's not special. I don't care what it is.
yeah, it ain't, bro. And that's what the small account made it for me. It made it special because I was like, yo, I'm gonna build this small account. And I went full retard here, full retard because it was special. Isn't that so crazy, bro? Like when it becomes special, it's now mysterious. You know what I'm saying?
Yeah.
There's room for question, and
Yeah.
that's the
There's
shit that costs us
expectation.
money.
Expectations will kill you.
Yes, bro. Yes, thank you for reminding me on that, bro. It's so important because I don't care if you're doing a challenge, funded, trading your own money. I don't care what you're doing. These charts only respect present moment decision. Okay, so if you're riding this nine or whatever it may be, um, and I love this tool right here that we use where if you're in a position, all right, bam, you in it, you in it, you in it. Um, you in it, and then you got this big green bar, and this candle wipes out the bottom. Bam, I'm out of it. Done. Don't care. On to the next. Um, yeah, that's a great way to trade that right there. Phenomenal way. And know what's crazy? One more thing I want to point out about this. This was an exact dollar move. So the HPT cross still, I had to log this as a successful trade in the data because it was a dollar move. And I think that's something very important. Like, what are the odds? And this isn't the first time I've seen it. The HPT cross, the RBI, GBI after the moving average, the chances of you getting at least a dollar move are usually very significant. So, like, once the dollar move hits, it might keep going, but if it's going to reverse, it's usually right around that dollar mark. So that's a gem that really helps me hold, because I know it does happen more often than not. Thursday, Thursday I got faked out. I got faked out on Thursday, and I went over this trade a lot, and I would trade nothing. I honestly would probably take this trade again. I want to talk about it though. Here's previous day high. All right, so let me just label this because this is important and played a vital role. Notice the story here. Okay, we are well above we're above previous day high, and then we fall below it. All right, this is I've traded this a million times. Okay, this is bearish. You've fallen below PDH. Okay, this is bearish. What I failed to realize was where the 1 hour trend was. 1 hour trend was pulling up. But honestly, hindsight's always 2020, right? We fell below PDH. I got my criteria, moving average cross, green bar got disrespected right here. Now, I went short right here and I got stomped out, right? But this is the thing. I was playing into EOD, and this candle, this GBI right here, this green candle, this thing was very big. I honestly had no business hopping in this short just because of how large this candle was. It was about $1. So it's about 60 cents. Moral of the story, though, is this strategy that I went short on and got stomped out on, the same thing popped open on Friday, and we got a banger, right? So, like, this is the key, and this is why in the beginning of this webinar I said I like to look at trading like it's blackjack, right? Like, you're either the player or you're the house, okay? You become the house when you stop trying to win every trade. The house don't care about winning. The house cares about the long game. It cares about making sure your risk is on point, staying in the game. Just stay in the game, okay? Because these are going to happen. This was a mighty fake out here to the downside. But once we were faked out, it fueled this move to the upside. And now, this one more thing I want to just touch on is notice here, once we get that red bar that's disrespected, you draw that box around it, and you play long until this thing breaks. Like, look at how the area of value, which is this box, and all that is an RBI. Draw a box around it. Look at how it holds. It holds. It held for the rest of the day. I was able to capture multiple trades this day just because of how I used the 1 hour trend. And look at these. Red bar, ignored. Draw the box. Bam. Play the retest. Okay? Oh, missed that one. Look at this one. Red bar, ignored, draw a box. Play the retest. Okay? Oh, hold on. One more. Red bar, ignored. Play the retest. Right? So really using them areas of value it helped me this day, because I'm not going to lie, that morning trade really threw me off. And I'm like, you know what? We stomped out we were supposed to. Once again, the market's going to do what the market's going to do. It's not my job to be right every day.
Yeah, what really helps me, and the longer I've traded, I realize I'm really a break and retest trader at the moving average, close to the moving average, near the moving average. How do I get in? green takes out red, red takes out green. But and if you look at it with like no indicators, and for me personally, I'm really just a break and retest trader.